with EY Pakistan, and I'm delighted that the tax partner who was leading this for us, Mohammed Awais, is here with us this evening, and Mr. Awais will sit on the panel later on to share his experiences as well around this very important indirect tax topic. Now, the reasons behind why we came out with this report is because for years now, ACCA has been having a number of engagements with the business community, with its members, whether here in Pakistan, whether here in Sri Lanka and Bangladesh, and some of the themes were quite common across the region. So we know for a fact that the legislation in the region in South Asia is very complex. You don't need me to tell you how complex it is with the continuing number of SROs which are issued, notifications, directives, circulars. So it's a very, if you like, hostile environment for both businesses and for professional accountants to keep up to date. So complexity is a common theme across the region. The other thing is it's not simple. The taxes have become very difficult to manage, and compliance for businesses as well as you who are working within businesses to navigate them through compliance, it becomes very difficult. There are all sorts of challenges across the region with thresholds, and we'll be listening to what sets the threshold limits. There are issues around penalties. Some jurisdictions have very high penalties, some jurisdictions have low penalties, and so that will be brought out as well. The interesting thing in the region, and because I'm representing Manasseh, is UAE. Up until now, all of us thought that UAE was a tax-free haven. You know, the main branding attraction to the UAE was it was tax-free. But now, under the IMF sort of influence, they're going in for a low level of VAT by 2018. And Chaz Roy Chowdhury, our head of global taxation, is here today. He will present you with a summary of what the report is telling us, and then also sharing his own experiences around the UAE experience, which we've had last week, and also around what the future holds for us. So I hope you'll be engaging later on through the Q&A session that we have. Do think about the questions that you'd like to put up to the panel. You know, try and make those questions in the area of indirect taxes. In Lahore, we went off onto property valuations for some reason. They seem to be very interested in that. And so try and ensure that you keep it on indirect taxes, whether they're taxes on goods or whether they're taxes on services. Okay? So I'm sure you've all had some experiences on how to manage and navigate indirect taxes in your own organization, but I think it's a very important subject, as we'll hear from Chaz later on. So please do give Chaz a big round of applause when he comes in. His Pakistani visa took forever to come through. He went in the pouring rain, rather, on the last day before traveling, and finally his visa was given to him. So please, a big round of applause for Chaz.
I've got this so I can walk around rather than just stand there. Because normally I just have a laptop on the podium and then I just have to stay in that one place, whereas there's no laptop and I can actually walk around up to. Oh, sorry. So I can walk around. There's a camera there, so try and stay within range of the camera. Thank you all for making it. I know the traffic was absolutely horrendous. We got caught in the traffic on the way here as well, back from a meeting downtown, back to the hotel, and so you probably had similar experience coming here. As Arif said, we've just been to the UAE last week and earlier this week, and they are about to introduce VAT. So it's a very important tax indeed. And in Pakistan, you have a sales tax, and across the subcontinent, we have indirect taxes. So all round, it's a very important tax And our friends at EY who helped compile the report have done an excellent job. So please do look at the report, and we hope to expand on the report subsequently once we actually know what the UAE legislation looks like. Because at the moment, all we know, as Ari said, it's going to start on the 1st of January 2018 at 5%. But we don't know a great deal else. I'll tell you what else we do know when we come to the UAE, but there's a lot of information which is lacking about what is going to be happening. VAT, as you can see, is an extremely popular tax. 167 countries so far across the world have VAT. It started off basically in part of the EU implementation back in 1954 in France. And since then, country after country has implemented it. It is the most popular indirect tax in the world. And whether you call it a GST or a VAT or just an indirect tax, it usually amounts to the same thing. As long as you have input taxes and output taxes, you allow input tax deduction, it is basically a VAT. And I know that the term VAT isn't quite often used in Pakistan, but it essentially seems to be a VAT from what I understand. Why is it so popular? One of the main reasons is that because for the tax authorities, they don't have to do very much work. It's you, the taxpayer, who does most of the work. So it's self-policing. Every input has an output until we come to the final sale, which should be to the consumer. It is meant to be a through-flow tax, so it should have little impact on the business. It shouldn't stick to the business. So the tax that you suffer here at 16% or 19.5% should not stick to your business. It should just be on the end consumer, whereas the telecoms at 19.5% or other goods and services at 16%, it should not make any impact on the business. It's also a tax where you just pay across at the end of the day, and it's least susceptible to fraud, especially when it's in a single country. Sorry, I'm being turned the microphone further up. So when it's in a single country, the problems we have in the European Union, which I'll give you some examples later on, is that because we have cross-border trading, it can cause problems in terms of fraud, something called missing trader fraud. One problem about VAT, especially in a developing economy where you've got a lot of poor people with low incomes, is that a poor person will pay the same as a rich person on a specific item. So it's some sort of regressive, but also others call it proportionate. So you pay the same tax on the same item as anybody else, regardless of income. So that's one of the sort of downsides of having a VAT, if you like. I'm not sure if you can read this, it's slightly light, but the information is in the report. And if you look across, the top line, this is in dollars, is the threshold, the turnover threshold, not the profit, the turnover threshold, at which in each of these countries, the business has to register for VAT. So in Pakistan, we're looking at nearly $50,000. In the UAE, they're proposing $1 million turnover threshold before you have to register. Very high indeed. So it's a big, really high turnover threshold. But what we're hearing, at the last event with Thomson Reuters for SMEs on the last go there, is that they heard that this turnover threshold might in fact be dropped to $100,000. And so that would be a significant drop and bring in a lot more businesses. So as things stand, in Pakistan, within the subcontinent, you have a pretty high threshold. In Bangladesh, it's even higher, which would be very similar to what the UAE might turn out to be. And so it's quite interesting how turnover thresholds are quite wide. There's a lot of disparity between them across the subcontinent. It's important to realize, in terms of VAT, what that means in terms of tax rates. When you have exemptions, it means you cannot recover input tax. That item is exempt. But when something is zero rated, that's still a rate of tax at the rate of zero, so you can recover the input tax from that. So it's quite useful where goods are zero rated, so it's little cost to the consumer at the end of the day, so it's essentials can be zero rated. But you can, as a business, recover the input tax. So where you have basic foods which are exempt, then you don't have the ability as a business to recover the input tax. And you as a consumer are getting the item tax-free, but it may be at a higher price because the business which sells it to you has not been able to recover the input tax. So it's quite important. And almost invariably, you should have exports which will be zero rated. So while the supply chain, the items in the supply chain, it could be, say, a washing machine that you're going to export that's produced in Pakistan, the supply chain may have VAT in it at 16%, or whatever the rate is that they're applying to it. You will end up with the export, at the point of export, there'll be no VAT charge. There'll be zero, or they'll be charged at a zero rate, so that you as a business, you can recover all the input tax in the supply chain, but you sell the item on across the border outside Pakistan at zero rate, and then the people who are importing it, when it's a business, assume it'll be a business, they will do what's called a reverse charge, and they'll charge themselves VAT at whatever rate applies in their jurisdiction. I think this part is pretty important. It's key to the way that any tax operates, whether it's indirect tax or direct tax. It's essential that we have a penalty regime that isn't there as retribution, that isn't draconian, that it is there to help compliance. Help compliance, not enforce compliance by a heavy stick, by being heavy-handed. It's there to just make sure that where you're getting wrong, the compliant taxpayer is not being treated as a soft target and being taken for a large penalty, large interest charges. And it should be a mirror image. It should be the same for the tax authority. So when the tax authority gets it wrong, they should be paying the business an interest supplement, and they should be also paying a supplement which is equivalent to basically a penalty. That's what happens in the UK. If the tax authority gets it wrong, they'll pay the business interest and a supplement. And supplement isn't necessarily set out in a codified way as a penalty regime usually is, but it will amount to the same thing. And I think that is actually very important. I was hearing that in Egypt, where they're introducing a new VAT system, they are seeking to obtain penalties which they consider to be a revenue burden. That should not be the way penalties operate. They should be there to help encourage compliance. And it will usually be those who are trying to comply, where they make mistakes, they treat something as being zero rated where it should be standard rated, i.e. 16%, so zero, something is zero rated, or they treat it as being zero rated rather than exempt, so they make a mistake. They're the ones who are on the radar for tax authorities. Ones who are not on the radar, the tax evaders, they will never get a penalty because they're not picked up. So they shouldn't, the tax authorities should not be picking on soft targets, I think, from the ACCA's point of view. And so you, as a compliant taxpayer, should not be subject to penalties. And then the tax authorities need to develop a system where they encourage compliance, not through trying to make money from penalties, but just using a light touch penalty regime. And in the main, it will be a self-assessment system. So it should be up to the taxpayer to get it right. And it's only where the tax authorities decide to undertake a tax audit, which will be on a random basis or intelligence-led, risk-based, then there might be mistakes found and penalties imposed. Now, refunds are key as well. There is no point in having a tax regime where it's just a one-way street, where you owe the tax as a business, you pay the tax across, input less output tax, it's the amount you pay across, the net amount of that is what you pay in VAT. But it should be that if you're in a refund situation, that you're a big exporter, so not zero rates, you're entitled to input tax deductions, so you get the input tax back, you're entitled to refunds. You should get that refund back quickly. And in terms of the UAE design, they intend to refund tax VAT quickly as a part of the system. And I was hearing that in Pakistan it isn't like that. It's actually difficult to get the money back. And we can have that same situation in Southern Europe, in countries like Italy or Greece. You just never get the money back. In the UK, you get the money back within 2-3 weeks, which is pretty fast, I think, by tax authority standards. And that's really what you should be striving for. It should be, because it's a true cost to a business, so it should be recognized by the government that it's a true cost to business. and you get the money back quickly, so that you don't end up going bankrupt. You don't end up not being able to pay across your VAT for future years, future periods. You're able to pay your suppliers. You're able to function as a business. So it is key, it is important that you actually operate a refund mechanism as a tax authority which helps and encourages businesses. Information technology is the key. As you know, in Pakistan, most of the tax regime is computerized. VAT is based on IT systems, and so you have e-filing. It's meant to be self-assessment, but I understand there are a lot of tax audits that go on. But it's really around the integrity of that IT system, because you may have electronic filing, but you may have problems being able to access the system to be able to do the electronic filing, especially at peak times, peak filing periods, like we have the tax return period earlier this week. And so does a system crash? We have that problem in the UK when we have self-assessment income tax filing. Sometimes the system crashes because there's just such a high volume of returns going in at the same time. And so it happens in advanced economies, so there's no embarrassment about it happening anywhere in particular, but we need to make sure, as far as we can, that the tax regime, the tax authorities, IT systems are robust and they don't go wrong. Or if it goes wrong, it's recognized and you have an extension to your deadline in being able to file. But I went into a lot more detail about IT because in the UAE, clearly, when they have a new regime coming in, they need to be able to know what the IT systems are going to require, which boxes, how many boxes in the tax return, which boxes need to be completed, and how, and all that sort of information needs to be fully worked out. Whereas here you have a developed system, so it's not quite something which I need to dwell on for the same period of time. Let's have a look at the comparisons. In Bangladesh, where they have per capita income of just under $1,000 a year, they've introduced, they have indirect tax as here. It's a federal provincial levy for tax. But it's interesting, what I find interesting in terms of the subcontinent is that indirect tax take is nearly 54% of all taxes. So it's pretty high. They have, even then, they're still running a budget deficit of nearly 5% in 2015, August 2015. The other interesting point is how the tax take for indirect tax has gone up in the 4 years from 2011 to 2015, from $7.4 billion all the way to $9.5 billion. So it has gone up. As in all indirect taxes, it is something which does go up. As the economy grows, as people spend money, the tax take goes up, which is extremely important for any developing economy. In India, the per capita income is slightly higher, $1,800. They are in the process of implementing a VAT system, but compared to the indirect tax system they had previously, so from 2011 to 2015, there's a big hike in tax take, from $176 billion to $232 billion across 4 years. That's a pretty big increase. And India is even more dependent on VAT as a tax, nearly 2/3. And the other thing I think I need to draw out is that India's tax take, total tax take, not just from indirect tax, in 2015 was 17.38%. In Sri Lanka, it was below 10. Sorry, in Bangladesh, it was below, nearly 9%, below 10%. So it was a bit lower. So we're looking at quite low levels of total tax take as a percentage of GDP. Coming on to Pakistan, where you have per capita income of nearly $1,200, and the indirect tax take is just under 50%. And the total tax to GDP is 12.27% in 2015. So again, it's quite low. But the interesting point is that, again, in 4 years between 2011 and 2015, your indirect tax take has gone up quite dramatically, from $11.1 billion to $14.8 billion. So, regardless of the complexities where the federal government is authorized to levy and collect sales tax on goods, as I say, in Pakistan you call it sales tax, but it is, as far as I can see, it has all the characteristics of VAT. and then the provincial government has the authority to collect sales tax and services, there's a real tension. Because clearly, one part of government will want it to be goods, the other part of government will want it to be services. And in terms of making future changes to indirect tax or GST, VAT, whatever you want to really call it, it would be useful to actually have a single authority who is responsible for the tax, and probably at a federal level, who then share the tax out. But I guess the problem we have in Europe, in the European Union, is that when we want to actually have a single VAT regime, nobody wants another jurisdiction, another country, to have to repay them the VAT that they collect, because they just don't trust each other. And I suspect a similar situation would happen here if there's a centralized VAT system at a federal level, then would the right amount of tax be paid out to each province? And I think that would, again, be one of the big problems about having it centralized and reformed. And in terms of the takeaways, there are real issues around the complexity of the tax legislation. I was just seeing earlier today a presentation about how complex your tax regime is. How many, and I suppose it's only part of the way in terms of complexity compared to the UK system, where it's even worse. But you have excise duties, and then you have VAT, and it mirrors the UK system. We have excise duties, then we have VAT, we have import duties, which are set at the European Union level, at least while we're in the European Union. So there's a myriad of different taxes we have in the UK and the EU in general. And so, from what I can see, Pakistan is quite similar, but there seems to be much more of a trend in Pakistan where there are withholding taxes, and you may not necessarily ever get the withholding tax back, or get a credit for withholding tax against income in the future. So I think there is an issue around that, and there's also a higher tax rate that you are subject to if you are not a tax filer. So again, is that really fair? If you are an individual or you're a business which is paying tax, are you the penalisation? Is that really helpful? And in terms of the again, just focusing on the government side first, the level of training for tax officials, there seems to be a feeling that we need to train them up much more effectively. Again, are there sufficient ACCA qualified individuals within the tax profession, within the tax authority in Pakistan? There probably isn't. And when I've spoken to the tax officials, done presentations to them in the past, and interaction with them, there probably isn't sufficient trained up officials, and that is something which probably needs to happen. And certainly we, as qualified or working towards qualification rates under ACCA, can play a part in that. If we can help build up that talent and that capability within the tax authority, or certainly help in advising if the tax authority reaches out to us to help them in terms of capacity building. That's certainly something we ought to be looking to and helping. In terms of the business side, again, we need to make sure that our people are trained up. We need to make sure that they are able to cope with the administrative burden, they understand how the VAT system, the sales tax system works, and the interaction between sales tax and the accounting is quite critical. And they need to have proper qualifications to actually understand the way that VAT and taxes in general are wrapped around the accounting numbers. So it is pretty important. Turning to Sri Lanka, again, the big takeaway is that they have 2/3 of their revenue, nearly 2/3 of their revenue coming from indirect tax. They have had a big increase in the 4 years between 2011 and 2015, $4.8 billion to $6.8 billion. Again, it's gone up dramatically. Again, you note that the tax take is under 13% of GDP in 2015. And that seems to be a centralized collection, which is what I say that would be advantageous for Pakistan if they can actually work out how the federal and the provincial governments can work together. I think it's actually quite interesting the way that in Sri Lanka that they've actually managed that. And it's also, I think it has, when I was reading some of the Sri Lankan legislation earlier on today, they've introduced simplifications in 2015 for smaller businesses. And I know you've got special schemes for smaller businesses here, and they probably should be commended. They should be carried on, and I know some of them were scrapped or reformed quite recently. And there are similar issues. when I was looking at the Sri Lankan tax legislation, again, it is quite complex. There is a lot there. But it's not surprising because you all started off from the same starting point. Okay, the UK didn't have. We didn't have VAT, but we had purchase tax, and you started off with the same tax regime in Pakistan and the subcontinent. And that's why you've then built on that complexity. Then you learn from the VAT system in the UK and the EU, and it's just become ever more complex. And if we can start with that clean sheet of paper that the UAE is starting with, they themselves could end up with a much better tax regime and tax system that we've been able to sit from. I've got the UAE here, and this is the additional bits of information that we know about the UAE. So, in addition to the 1st of January 2018 starting time, 5%, all that we know, there's no legislation yet, is that there'll be approximately 100 items of basic food, health, education, cycles, certain types of services, which will be either exempt or zero rated, and there'll be a requirement for businesses to e-register, and it'll all be done through the internet, through internet filing, to e-register 3 months before the start date in January 2018. So that's all we know. We don't know much else. There's Q&A on the website. I was told when I was there that, for example, businesses, when it comes to exports and imports, they'll be able to recover input tax, so again, zero rating at time of export, which you'd expect. But it said that on the Q&As on the website, you couldn't, as a tourist, recover input tax when you leave the UAE, so the 5% input tax, which you can recover, say, when you go to the UK or Singapore or most other jurisdictions which have a VAT system. You as an individual taxpayer can recover it. It says on the website you can't, or that you won't be able to from 2018. But somebody who's been involved in drafting the legislation said that we've seen the provision which indicates you can. So what the truth is, we'll only find out as and when that happens. So again, the drafting of the legislation is just anybody's guess. We just do not know where we stand on that. And I just don't know where they're going to get the recruitment, either here or in the business, because where are you going to get several thousand tax officials who know about VAT, or several thousand tax employees who know about VAT? They are in short supply in Europe, which is the main complex area for VAT. So will they migrate across the UAE? I don't know. And again, that really means there's a great opportunity for you here on the subcontinent to help the UAE. And one of the other things is that they have real problems around proper record keeping. There is a real issue, it seems, especially at the smaller end, in terms of proper accounting records and the production of accounts. So again, you as an ACC. And because of this 3-month filing requirement that's going to come in the UAE, and as I understand, in the UAE you never get paid, there'll be something in terms of the business model. They need to look at how they change the supply chain so that they get paid in time and they pay the people who they owe money to on time as a business. And that is going to be very important because, okay, the tax is only at 5%, but 5% is still a significant amount. It could be that you owe profit margin as a business, you have to pay 5% across before you actually receive the 5% VAT that you're owed, the money that you're owed. So it's going to be important in terms of making sure that the IT systems chase people up and your politeness to people, you actually understand as a cultural issue in the UAE that you're not being rude to your clients, you're not being rude to your suppliers, but you need to actually have the money on time, otherwise you yourself as a business are going to be adversely impacted. Now, a bit of content at the very end. It's also important there, I spoke up to them about the invoicing rules, and we have, so I won't spell out to you because obviously you have a sales tax system, but what we also have is that, and I mentioned about printers, but we also have, at the bottom of that slide, there's something about simplified invoicing. So we have simplified invoicing for basically for retail businesses. So that's something which is worth considering, because while you can't see this, so things like the details of who you're selling to, you don't need that kind of information. So sales of up to £250 in the UK need much simpler invoicing requirements. And that's something which you might consider looking at in this jurisdiction. Then we move on quite quickly to legislation. Now, we have specific anti-avoidance measures in the UK. The GARD, General Anti-Abuse Rule, or General Anti-Avoidance Rule, as it is in some jurisdictions, there's an anti-abuse rule in the UK, doesn't apply to VAT, because the VAT is based on the European Union 6th Directive. So it's a European tax which the GARD cannot apply to for various reasons. And so it has targeted anti-avoidance rules around it. But underlying that, we have a proper recourse to judicial procedure, which I'll come on to in a second. But I mentioned earlier about some of the problems we have selling across borders, which I don't know if you encountered. We have something called missing trader fraud. There's something in the region every year, there's until 2013 figure, of nearly 200 billion euros of tax gap for VAT. That's just VAT, not income tax, not corporation tax, not capital gains tax, just VAT. Nearly 200 billion euros tax gap across the European Union of 28 countries. So it's pretty huge, it's pretty significant. So that's over $200 billion. And one of the biggest problems we have is missing trader fraud. So what happens is that you have A in country A sent to B in country B, and when country B, so there's a sale across borders, so 0 rated here, B here is supposed to do a reverse charge, so tax himself for VAT, say at 20% of the UK rate, so he's notionally taxed himself 20%. And then sells on to C, so when he sells on to C, he can recover the input tax that he suffers. So, and then he's supposed to pay across the tax authority, HMRC, the output tax. But before he pays across the output tax, as I say, in the UK, they're very efficient. The tax system is, the tax authorities are very efficient in paying money back. So he gets the money back before he actually pays any money across to the tax authorities. So he's been paid here for the full amount. And he actually disappears with the VAT. So it's called missing trader fraud. But what actually happens? That's a more complex situation where B disappears again. But what happens here in this complex situation is that the legislation allows the tax authority, so say it's the UK, say it's Germany, this is France, there's French supplier, B is disappeared with the tax, C is bought, D is bought, E is bought. The tax authorities can go 3 down the chain and recover the input tax from totally innocent third party. So if they can't get the tax from C, because they've just gone bust for some reason, or D, because they've gone bust as well, they can go all the way down to E, so the third person in the chain to recover the input tax, to recover the VAT that B disappeared with, because it's considered that these 3 in the supply chain did not do sufficient due diligence. And so if something appears to be too good to be true, it usually is. And so it's quite draconian. This is a more complex example. So we have some very draconian, specific, targeted anti-avoidance legislation in the European Union trying to stop missing trader fraud, trying to make sure people don't tax avoid, people don't tax evade. But at the same time, there's proper recourse in terms of judicial process. I've compared the UK and France here, but let's just have a look at the UK side. So if you don't like what the tax authorities in the UK are saying to you in terms of how the treatment for VAT should operate, or any other tax, you can turn around and have an independent review within HMRC. So the HMRC will do an independent review to see who is right, you or they. And it'll be done by somebody who sits outside of the department dealing with your tax, who will look at the tax and come back with an answer. If you don't agree, you can then take it to tribunal. So we have a first-tier tribunal and upper-tier tribunal. You'll take it to first-tier tribunal if it's a very straightforward case, and upper-tier tribunal if it's not a complex case. So if we one or the other, you don't get the first tier, you go to the upper tier. But from there, if you still are unhappy, or if the tax authorities, HMRC are unhappy, then you can go to the next stage and go to the Court of Appeal. And if you're unhappy, either you or the tax authorities, you can go to the Supreme Court and then get a decision. If you're still not happy with that, the ultimate court in the European Union is the ECJ. And the ECJ is the top court right across the European Union, across all 28 countries. And you can have your appeal heard there, and the decision they make will be the one that will statement, regardless of whether it's in favour of the tax authorities or whether it's in favour of the taxpayer. One last area I want to touch on is groups. Now, I know you don't have these in Pakistan. I think it's quite an important area which exists in the UK and Ireland, especially. Only 50% of the 28 member states in the EU actually have grouping. And many of them have much more restrictive grouping rules than UK and Ireland. And some of them have what they call consolidation rather than grouping, so they don't really have a proper grouping system. And the other 50% don't have anything, so you can only be treated as a single entity. Each company, even though you are all part of the same group, you have 50% ownership, you're not treated as a VAT group, and you may be treated for direct taxes as a group, depending on what the rules are. So where there's a holding, a direct or indirect holding of up to 50%, then, and the turnover is, group turnover is £10 million or more, you can form a VAT group. So you have just one VAT registration, one VAT tax return, one company within the group. Say if there are 100 companies, one company in the group makes that return, is responsible for that return. And what happens is that it's extremely advantageous because you don't need to charge VAT into group. So where you've got, especially companies which are exempt, so financial services companies, companies say food, which are exempt largely, so supermarkets within your group, then within the group, you don't have to worry about input tax recovery or lack of recovery, and you only deal with the net effect of partial exemption at the end of the quarter or the end of the month, wherever your filing period happens to be. And so, again, you know, there's flexibility around filing. You don't have to file every month, you can be filing every quarter. So it's an extremely flexible system in the UK, and the group regime allows much greater input tax recoverability of partially exempt businesses. So where you've got a bank, you've got a financial institution, something which is exempt or partially exempt within your group, you can recover much more of the input tax, and you wouldn't be able to if you actually had a standalone company, which was just essentially treated on its own as nearly 100% partially exempt. So it allows cash flow and it helps businesses. And a lot more countries in the European Union, and certainly here, ought to be thinking about the idea of groups, because at the moment you're having to divisionalize your companies rather than having a proper commercial structure, which is, enables you commercially to do what you want to do. You're having to restrict that artificially because you don't have a grouping system for VAT or sales tax. And I think it also helps in terms of the tax authority. So it helps in terms of getting the refund, just a single refund, a single VAT return, and the tax authority can ask to see the group structure. If you've got, say, 100 different companies, because there isn't VAT grouping allowed in your jurisdiction, all sending in VAT returns, then the tax authority is going to be overwhelmed, and they're not going to be able to see the wood for the trees in terms of the group structure. And so it is much better that you have a grouping regime where the company, the responsible company for the group, actually submits the group structure. So the tax authorities are able to see that and then be able to identify whether issues, whether they agree or disagree with something, whether they need to conduct any kind of audit or ask further questions. So it gives much greater clarity for the tax authorities too, as well as the business. Now, within the report, I'm not going to cover this because we have Q&As. There are a number of recommendations which I commend to you and you should read at the back of the report. But what I want to do is actually stop here and let's start a panel discussion because we started late with transport difficulties. So let's all now liven things up and start working with the panel. Thanks very much.
Can everybody hear me at the back? So let me invite on stage Mr. Mohammed Awais, Partner Taxation at Ernst & Young, Pakistan. A big round of applause for Awais Saab is a great contact for ACCA. His team have really developed this report for us, and so we're very excited about taking this report to Dubai, onto Sri Lanka, and we're hoping also later on to take it to Bangladesh as well and have some events similar to this in Dhaka also. So I'm going to start off with some very brief questions to get us all sort of into sort of GST mode, but at the same time, can I ask you to keep on writing down your questions, and I'll open up the floor for questions so that we can address some of the issues and the challenges that you're facing as well within industry. So one of the questions that we've been asking throughout the activities, the events that we've been organizing, is that when we see the tax rates across the region, for example, in the UAE, they're setting a very low tax rate of 5% as they introduce this. That's the expectation. Whereas in Pakistan and the other South Asian countries, we're seeing rates as high as 17%, or 19% if we add on other layers of sales tax. So my first question, perhaps to Awais, is why in Pakistan are the rates set at a very high level when our per capita income seems to be very modest indeed compared to the $40,000 per annum that the per capita income is in the UAE. So would you like to touch upon that first, Awais?
So first of all, thank you very much for providing this opportunity to share our views. Particularly when comparing the rate, first of all, obviously comparing the rate with the UAE may not be the right base. Because of the fact that UAE always have been a tax-free jurisdiction, and they are in the phase when they are just introducing a new tax, and whenever in such jurisdiction where no taxes have been levied in past, starting with a higher rate would not be, I think, the suitable solution, and they will start with a comparatively lower rate. And when we compare the rate of the indirect taxes with the other jurisdictions, though it will not look that the Pakistan rate may not be considered as much higher than the other, like India, like Bangladesh, Sri Lanka, or even the developed jurisdiction. When we compare, there are in UK that might be around 20% rate is applied there. But the problem in Pakistan is that our own taxation system is now shifted towards the indirect taxation, and their focus is on basically how easily the taxes can be collected. And as the judge already explained, that the collection of the taxation under the indirect taxation mechanism is comparatively simpler and easy as compared to directly collecting the tax under the direct tax mechanism. Due to these reasons, because of the fact, similarly in our direct taxes system, there are a number of taxes which are going to be collected as a mode of indirect tax. Like I will give the example, like our imports are going to be taxed as a final tax regime, where the tax is collected at the import stage at a certain percentage, which is considered as full and final tax liability. Similarly, on contract transactions, certain supply transactions. So that is also based on indirect taxation. So by considering that these factors, that our society is not so well versed for making the payment of voluntary making the payment of the taxation, one reason. Secondly, our taxation system and the collectors are not so good functional that they could collect the proper taxes on the direct tax mechanism. So government has to opt on such mechanism wherein the direct flow of taxation money can go to the government, and that looks that the indirect taxation can be comparatively easier one. So this higher rate has been implemented here. I can say 17% on boards, and similarly now the other challenge which has been when they were in the phase of introducing service tax by which is going to be collected by the provinces. They have just now started in the recent area, that 2011 and 2012 was the starting period when they started in Sindh and Punjab, and now it has been expanded to Khyber Pakhtunkhwa and the Balochistan region. And there the rate is also ranging from 13 to 16%. And one of the major reasons was that because provinces are allowing inputs against the federal government taxes. So now, if the federal government is already collecting tax at the 17% and the province pays at a lower rate, then the province would get nothing, because they will be just bearing the input cost of the 17%. So the provinces also has to fix the rate and similar to the federal government, so that they can collect the right amount after allowing the adjustment of input taxes of the good. So this is the one of the reasons that these all rates are kept at a similar range, because now our governments all have to think, because when that this 17% was initially fixed, when the number of services were not going to be taxed, and only the major taxation was going to be collected on the goods, and now they have expanded their scope, and now number of the services are going to be taxed. So I can easily say that our tax base has been increased, and from the goods to, and it also has been shifted to the provinces, and now the provincial authorities are collecting a reasonable amount out of the taxes. So the government should think for reduction of the tax rates, and at least it should be there could not be reduced at one go at much higher rate, but they should reduce to 15 and then comparatively to 12-13%.
So one of the other areas that was mentioned in the report was the differing levels of thresholds between the jurisdictions. So in Pakistan, $50,000 equivalent threshold. In Bangladesh, $100,000. In UAE, anticipated at $1 million, but the intelligence is suggesting that it may go down to 100,000. So what is driving, from the tax authorities' point of view, what is driving these threshold limits, Chaz? You know, perhaps your experiences in the European Union, what is it that drives these thresholds?
I think at the end of the day, it's probably political, because in the UK we have equivalent of $100,000 registration threshold, which is the highest in the whole of the European Union. Others have zero, or near enough zero, maybe $5,000 for SMEs, or just very low indeed. But with VAT comes compliance firm. So there's a real issue around whether you should have SMEs registering for VAT, and the UK takes a view that no, we don't want that. But at the same time, and I didn't bring it up, is that you can voluntarily register. So if you're an SME and you're suffering input tax, you can voluntarily register and recover input tax. So you have the option. So you can either have the option of just not registering at all, don't worry about VAT, don't worry about recovering input tax you suffer on your phone bills or IT equipment or other services you buy in. Forget about that compliance firm, but then you have the choice. So it's entirely up to you. And I think the UK has a much more commercial view, and I think that's probably replicated here in terms of the UAE, where it's been tax-free up until now, and will have a much higher threshold, and it probably needs to have a much higher threshold, because when you are implementing a tax for the first time, got no tax whatsoever, then you need to have the larger businesses coming in first, rather than smaller businesses. So that's probably what's driven it. In terms of subcontinent itself, India seems to be a stark contrast. Why they have a $15,000, $15,500 turnover threshold for registration? It's pretty low compared to the others. So it seems to stand out on its own to some extent. But you probably need something which really suits you politically more than anything else. And I think that's really what drives thresholds more than anything else.
Also, just I will add one thing here. That, as in the Pakistan, when they introduced the tax on services, there is no threshold limit, and if any person who is providing that particular service that is required to be registered, irrespective of any threshold. So this factor also is related to, like as Chaz already explained, on the critical ground, and also the capacity of the implementer. Basically, that is also different. That if the federal, like I would say in Pakistan, the Federal Board of Revenue could not implement this registration on particularly the retail sector, and due to that factor, they have number of times introduced on various schemes where the very low rate of tax, and particularly on a fixed tax model, they have introduced those taxes. So these monetary threshold obviously also depend on how the government can implement. And if they have the capacity to implement at a lower level, obviously the government will opt to fix it at a lower level. And if they does not have such capacity, then they are automatically, they have to opt a higher threshold.
Let's get a bit more practical now, because many of the ACCA members here working in taxation within the finance function will often come across within their supply chain vendors who are unwilling to provide a VAT invoice. Yep. It could be large companies, and it could be smaller companies, but there will be in your supply chain a number of vendors. It could be that you're organizing an event for your suppliers. You get a big catering company to come in, and the catering company says, we'll give you a such-a invoice, and there's no VAT on it. So, what do you do? How do professional accountants therefore manage instances where there are vendors within the supply chain who are unwilling to give you proper VAT invoices? Do you just not do business with them? Practically, what do you do with this?
Now, recently, definitely the government obviously is facing this problem, and due to which we always say that our majority of the economy is undocumented, non-registered, and initially the government introduced that whenever you are dealing with any non-registered person or a person who is not issuing the sales tax invoice, the buyer of the goods was made responsible to withhold the total amount of the tax of the 17% on the goods, which was again it was because it was going to increase basically the burden of an honest taxpayer who's dealing on the books, and so then it was challenged, and then after the court intervention, the rate was reduced, and now if any person is buying goods from the unregistered supplier, that person is liable to withhold tax at the rate of 1%. And the objective was that in this way the buyer will provide the particulars or the information of the person who is supplying taxable goods, and this information once will flow to the Federal Board of the Revenue. They will take action, and they will make that person responsible for the registration and charging. But practically, Federal Board of Revenue, I will say that they could not avail this opportunity, and I have never seen any such registration which has been made on the basis of such information. Just they have made in their budget, they have picked that this 1% collection, how much the tax will be collected out of this withholding taxes, and that has been treated as one of the source for the tax collection. So that database has not been used. But in the case of the services, the situation is quite different. In the services, if any company is procuring taxable services, and if the person is supplying without the registration, the company is liable to withhold the total amount of sales tax, irrespective of the fact that the sales tax has been charged thereon or not. So now, in the services, the businesses are going to be shifted, and now the people are opting to do businesses with such type of person who are registered person, and therefore their compliances and their registration percentages comparatively increasing with the passage of time.
So some companies could lose business if they're not following best practices of registering and issuing a bona fide invoice.
Yeah.
Chaz, just touch on that point. in the developed economies, and I'll ask you this as well, how do you check for a bona fide VAT invoice? What is the check that finance professionals can undertake to ensure that this is a bona fide VAT invoice?
Yeah, well, in the UK and the European Union, there's actually a portal where you can put in the registration number and just verify whether it's bona fide or not. So there's opportunity to doing that. But what I'd say is that if it's a fraudster, they'll almost always get it right. So it's very difficult for you to actually be able to find whether somebody's a fraudster or not. But what I would say in the UK and in other European countries is that it's not a business which will, where the person who wants to evade VAT will try and give you an invoice without VAT on it. It's actually the end user, the consumer. And sometimes some consumers will say, how much is it for cash? But the problem there is if you do a cash in hand transaction, as it's known, then you've got no recourse. So if they do some building work on your property, or they sell you some good or some other service, and you decide, okay, well, I'm going to save 20% by just paying this person cash, and they do a useless job, or they don't complete the job, and you pay them, and you pay them in installments and stage payments, what recourse do you have? So certainly, as an individual, in that circumstance, you should be looking to accept the VAT charge. And so you get a guarantee, you can have a recourse to the courts. Then, if you have a problem where you've just done a cash-in-hand job, and you want to take it to court, court's going to ask, well, you decided to evade VAT, or are you going to even dare to take it to court? It's going to become very difficult for you to do that. So they should be mixing, doing business with those kind of people, really, as we were discussing earlier, where they don't want to charge you VAT. I would think, as a business or as an individual, think about walking away from such people.
What are the checks that we can do here for establishing a bona fide GST invoice?
The same mechanism basically as the challenge explained as is applicable in UK, that is also applicable here.
We can go online.
We have a system where we can find that who is a properly registered person and is not a blacklisted or non-compliant. So anyone who wants to buy and do business with a compliant taxpayer, you can check from the website of the Federal Board of Revenue and obviously.
How many people here have you checked if you are working in small businesses or large? How many of you have actually gone to the FBR website to check a bona fide invoice? One of my colleagues is putting up there. So put up your hands. It's about 1/3 of the audience have actually done that. And if you don't mind me asking, one or two of you, would you like to give an example of what particular goods that you were checking on? What industry were you checking on? Anybody would like to share that information? No? Yeah, please.
It's not based on an industry, it's based on registration numbers.
Yeah.
And the numbers it can be based on CNIC,
Right.
it can be based on sales tax registration number, and that's when it comes to FBR. Then there are different sites for provincial sales taxes, where you have provincial sales tax registration numbers, which you can use to find out. And it's not actually that invoices which can be verified. You actually verify if the supplier is actually registered for sales tax or not.
Great. Thank you
And
so
if they
much.
are, then they can.
Thank you so much. That's great to see it's practically being used. So let me open up the floor for questions as well. I think at the front here, sir, would you like to make a statement? I think my PPCL friends I know. Just, Sajid, please introduce yourself.
My name is Sajid. I'm from PGCL. Just one observation. On one hand, we are saying that in Pakistan, sales tax or interest rates are high. But if we go through this presentation, I have seen that the ratio of collection, the indirect taxes in Bangladesh, India is higher, much higher, 66% or 56% or more. But in Pakistan, it's only 59.6%. So there will be two reasons for this. One is that we are charging less indirect taxes, or other is that we are collecting more from direct taxes. or we may say that there are more zero-rated or exempted goods. So you
As I already explained, the major flaw basically in our VAT is that the government could not basically register the retail or wholesale or even the supply chain state, if I say. There are basically, in the VAT regime, the two major problems are. One is undervaluation at import stage, and second is non-documentation of our majority of the trading records. If you go into the major markets of any city, you will find that there will be the person who are doing much higher business, but they are not registered person. So the government maybe is collecting taxes from a very limited number of people who are, what I can say, MNCs are the companies who are properly documenting their sectors, and so these are the things. And on the other side, if you see that our five major sectors have always been considered as a privileged class here. Though on the one side, that are the basically like I would say the textile, I would say the leather, I would say the sports goods, surgical goods, and carpet industry. These are the five major sectors who are the major contributors are in the our GDP, are in the our economy. But these five sectors either have been charged tax at 0%, are at very reduced rate of 5%, and various schemes have been given over the period of the time. By considering that they are contributing in exports, or maybe due to some other factors like having the strong lobbies or some other things. So these are the major factors that one, under declaration of the imports at the import stage, so you can't collect the proper taxes of the goods which have been imported here in Pakistan. And I can give you the number of examples where the pattern of the under declaration can be maybe 1/10, and in some cases I can assure you 1/100 of the actual price. And in certain cases we have seen that if I know the price of this glass is in the market is say 100 rupees, and if it is going to be cleared at 1 rupee, and I'm surprised at how that officer has accepted this value at the time of the clearance of the import. But this is happening in our society. And similarly, if you go into the market and get any sales tax advice from any retail sector, because the government has introduced number of schemes wherein the 2% rate has been given for the retailers, and even they could not collect, they could not register under those schemes.
So we are having very tough time from the customs. Every time they are saying that this deposit the guarantee, if we are charging less,
custom duties, so we have to give them the guarantee from each year. It's really very difficult because when we are doing legal business, that's why we are facing a lot of problems for the clearance of the our goods that are being imported.
So this is right. Our only compliant taxpayers are facing all the issues, and over the documentary sector that is facing much more problem. Yeah.
We have another question at the front here, the chap in the red t-shirt. If you'd like to put up your hand, if you have questions, please raise your hand. I'll have the microphone sent out.
And there are also some questions that are online for the attendees.
My name is Hashim Raj, and my question is for Mr. Vyas here. Can you please elaborate on the statute which refers to the holding of complete amount of sales tax on services if we are going from non-registered sales tax vendor? And is that input writable? Is that input claimable in our returns? And the third question is specifically related to IT services. If I work in an IT sector company and my engineer is working sitting in Islamabad and services are being delivered remotely to a location that may be located in Pakistan or Singh for that matter, so where would the incidence of sales tax be and which law would be applicable? Thank you. Well, if I could just get Chaz to comment on the principle of that nature of the transaction. So the last question first. Is points of the taxation where services are going across provinces. What is the principle? Where's the tax?
Okay, well, I'll tell you what happened in the EU when they made a completely different shift. Since 2010, when it comes to services, we've had a move from the source country tax to the place where the service is actually delivered. So, with, for example, you may have a conference, somebody who produces conferences based in Germany, and runs a conference in the UK for the UK. What would have happened in the past is that the VAT would have been charged in Germany in 2010. The VAT would have been charged in Germany for that service. But since 2010, and up until 2015, there's a transition. And now, what will happen is that VAT will be chargeable in the UK. So the German supplier of those conference services would charge UK VAT to its clients in the UK. So that's changed in the way that it happens in the EU. And I think you also mentioned in the first part of your question about input tax reduction. And that's what I briefly mentioned, where you've got exempt suppliers. You can't recover the input tax because it's exempt. Whereas zero-rated you can, and where you're not registered, you also get voluntarily registered to recover input tax. So even though you might be below the threshold, you can voluntarily register to recover input tax.
With Balochistan,
yes, just I will add, like in the Punjab sales tax law and in the same sales tax law, I think our provincial sales tax law is if you are a company working and you are procuring services which are chargeable to tax, and if the supplier of the services is unregistered person, then it is the responsibility of the purchaser of the services to withhold the whole amount of sales tax and deposit into the public trade. So these are the withholding rules which have been provided obviously under the various laws, and you can check, and under that it is the liability of the purchaser of the services that person will withhold tax and will deposit to the government authority. And as the chair explained in your other part, I think that will be clear that the services will be taxed in the jurisdiction where these are consumed. Basically, it is the general principle. So when I see our entire laws, you see the charging section of each, either it is the Punjab sales tax law, sales tax law, or Balochistan, they will say that any person where there is any services have been initiated, rendered, are terminated. These are the three basic terms which have been used, and every territory is trying to tax the whole amount, and due to which there are a number of problems, a number of litigation which the businesses are facing at this moment in this jurisdiction. Yes, that is right, but the basic principle of VAT is exactly the same as the chair has explained, and this is already applicable, I think, in European Union, and these will be charged in the jurisdiction where these are consumed.
So, just let me ask, have you been faced with two demands for taxation, have you? From Balochistan and Islamabad? No, I have not been faced with two demands. For example, one of the cases where the issue arose was that on our invoices, the bill to address and the ship to address was creating this confusion. So, though the services were delivered in federal capital, but the bill to address, the ship to address wasn't sent. So, my consultant and the person who I was dealing with, he said that since my task to that since the ship to address is Karachi, they might demand to the services sent. So, that was the confusion that I was in.
That is the same thing the chair explained. Basically, in the jurisdiction where it has been consumed, so it has been advised that the same will demand obviously the same thing, because the services are going to be consumed in the same. So it will be considered that these. So if I will see, you will take the example of the same thing, like if you will be taking services like from abroad. If you are taking services from technical services from the US, UK, or any jurisdiction higher, and you are consuming these services within the Pakistan, and then you will be making payment to outside Pakistan, you are required to withhold the whole amount of sales tax and pay in the jurisdiction where these services have been consumed. So, by following the same principle, if you will follow that Islamabad is a separate jurisdiction, Sindh is a separate jurisdiction, Punjab is a separate. So you are exporting service from the Islamabad, and then it is going to be imported by the same jurisdiction. and when it is consumed in the same, so the right of taxation obviously of the same government will arise there.
Oh, thank you. And I suppose in terms of the ethics on the part of, the professional accountant, the ethics should be that you should ensure that the bidding and shipping address reflects the reality, rather than any other thing. So that the invoices should actually reflect the reality. So I think we've got some questions at the back. Member, Mr. Yasser at the back there. Keep your hand up. Any other questions from the audience at the back here to BDCM afterwards? Yeah.
My name is Yasser. I'm working for a government sector organization. My question is about the domain of the sales tax and services to the comparison in the region. Especially in Pakistan, the provinces have taken the argument that prior to 1947, the original situation was that sales tax and services was the provincial domain. But when we see the version in India, I think that's not the case there. They don't have that notion. I think they are moving towards integration. So if you could explain what was the situation prior to 1947, and then you could compare that with India, Bangladesh, and then Pakistan.
Kevin is not going to answer that question. You're going to have to go away. So.
Obviously, we should not go prior to 1947, rather we should move further than how it should be. Your concern could be very right, and we see the example of the India. India is working on the little bit reverse model, wherein the taxation on services is collected by the federal government, whereas the tax on goods, a certain part is collected by the provinces. And now they are in the process, as Chaz explained in the initial presentation, that they are in the process of integrating the whole system, wherein basically they are, I can say, the responsibility to collect taxes is going to be harmonized, making it simpler way, so that the collection could be made at one point of time, and then the shares should be distributed amongst the various territories or the provinces. Previously, this system was working in Pakistan. Basically, the services that there is some, I can say that obviously the government has very much publicized this 18th amendment, and there, particularly whenever the taxation is going to be discussed with respect to the 18th amendment in the Constitution of Pakistan, they say the right of taxation on services has been shifted from federal government to the provinces. But this 18th amendment has just been passed now, and initially the taxation on services was introduced by the provincial ordinances of 2000. If you will remember, the Punjab sales tax ordinance of 2000 was, and similarly the Sindh was, Islamabad Capital Territory was. So, there was only a convenience. Originally in Pakistan, the right to collect tax on services was with the provinces, and they have given the authority to the federal government to collect their taxes, and so the federal government was jointly collecting the tax on goods and services, and at that time only only a limited number of services were going to be taxed under the sales tax system, and some of the services were going to be taxed under the excise mode, like telecommunication services, like banking services, like insurance services. All these were taxed under the VAT mode, but the excise was applied there. So this only now I can say that the things have been simplified, that all the services have been going to be taxed under the one provincial sales tax law, and the responsibility to collect has been now shifted to the provinces, due to which the provinces has established their own authorities, due to which the problem arose that now the businesses are facing the much more problem, because everyone has to get registered with the number of authorities, has to make the filing with the number of authorities. So this is the problem. But up to my understanding, the right of taxation was already with the provinces, but just the collection was with the federal government, and which now has been shifted with the 18th amendment.
Thank you, Wes. I think things are getting very complicated. We're trying to simplify the sales tax system, but our answers are getting more and more complicated. So let's have a question there from the young man who spoke earlier, then we'll bring the mic to the front again as well. Please.
Good evening. My name is Anil Peter and I'm from Peter & Co. Chartered Accountants. Ever since I started studying tax, about 14 years ago, we have heard that indirect taxation is unfair, it's wrong, and the move should be towards direct taxation. And I've heard Avesa speak about that as well on previous occasions. But what I've seen today, and the trends all over the world, especially in Asia and Middle East, we can see that it is actually increasing, right? It is expanding, it is not going towards the other way. So your thoughts, is it the time now, instead of challenging and saying it's wrong, to embrace it and think about how to reduce the tax evasion or avoidance, or still there should be a push towards direct taxation instead of indirect taxation? Your thoughts on that?
So let me just add to that question, because I think it's an appropriate time to add another dimension to that, is that increasingly the tax authorities are faced with a pressure to meet targets. Yeah? So we met earlier on today with BDO, and they were telling us that advanced taxation is often collected so that tax officers can meet their targets. Maybe their remuneration is linked with that, we don't know, but again, there is a trend, and a lot of businesses are telling us that they're coming. So how does the finance professional also cope and manage with the heavy-handed attitude that you were talking about from the tax authorities, but also reduce the trust deficit, buy into the indirect tax system? So perhaps you could address those two things as well. Who'd like to go off first?
I think I'll just go back to the slightly frivolous one, the 1947 question. But I think we did address some of them, but there used to be excise duties. So basically, rather than indirect taxes, there's purchase tax as well. So in terms of the indirect taxes we have now, they're excise duties. So that's how it's operated. And then you can see the remnants of that, where you have excise duties all over the place still in Pakistan and other jurisdictions, in the UK, and subcontinent. So that's the way it operated. In terms of your question, in terms of indirect tax and the equity issue, and in terms of the way that some tax authorities operate in a heavy-handed way around tax. Well, if we take the last bit first, I think it's a cultural issue. In the UK, on indirect taxes, we had a similar situation where customs excise ran indirect taxes, and the Inland Revenue ran direct taxes. The two merged back to 2000, so 16 years ago, but a part of the cultural shift that we managed to engineer as accountants, putting pressure on using the media, using our discussions with the tax authorities, was to bring them into life. That they had to operate through the law, they had to have regard to the taxpayers' rights, they had to enforce only when they're entitled to, they couldn't have heavy-handed penalties, which was marked the way that the VAT system worked. Default surcharges, we had penalties willy-nilly in the VAT system. So that's how we worked, just bit by bit. So through my work at ACCA, we put pressure on the HMRC as it is now, but customs excise as it was before. And it's also just lack of education, I think, on the customs side, on the customs excise side, compared to the Inland Revenue side, which had a structured way of educating their people in terms of tax. I think that may be also another part of the debate. In terms of the equity issue, I think there's a real problem, as I mentioned, about regression and VAT. But with the exemptions, in the UK we have a lot of zero rates, a lot of exemptions, a lot of reduced rates, so fuel attracts a 5% VAT rate, for example, domestic fuel. So you can actually try to smooth out some of the regressive nature or proportionate nature, as some people would like to call it, of indirect tax. And also at the end of the day, I think tax authorities need to have a mixed bag, a balance of basket, which is balanced in terms of tax. But for developing economies, it's easier to police and to get the revenue in from indirect tax. That's why, as we've seen in jurisdictions in the subcontinent and the UAE, indirect tax is the flavour of the month, or the flavour of several decades, in fact. And it probably will continue until there is, as Arif said, this trust deficit is addressed, there's greater compliance within your economies, I think there will be a push towards indirect tax. And it's happened anyway in advanced economies. We used to have, when we introduced VAT in the UK back in 1973, it was at 10%. Now it's 20%, and VAT was the third largest revenue earner after income tax and national insurance, and now it's the second largest income earner for the government. So it is, there is a move right across the world towards indirect taxes.
I think the judge has explained this part, and now as the judge said that in the overall taxation, it's not only in Pakistan, rather in the world, the collection on indirect tax is increasing, and the governments are much more focusing on the indirect tax. Yes, and the Pakistan, obviously, it's accepted now problem that our majority of the economy is undocumented. Our people are not willing to pay direct taxes voluntarily, and similarly, even the capacity of the government to implement or recover the direct tax is not much more appreciated. So that is the basic problem. So due to which, obviously, there could be no other solution, because the government needs funds and government has to collect the money, and therefore their focus is going to be indirect tax. Yes, the important thing which is required to be considered, that the basic necessities, obviously, that should be kept at zero rate or at a very low rate regimes are exempted. And again, still there is another very debate, obviously, that what is a necessity and what is a luxury, because sometimes there is a way of thinking, because I can say the mobile phone service are let's say the petrol products are these, for one person it can be a basic necessity, and for the other person can be a luxury, can be using as a luxury. So in these sectors, obviously the government has to think, and the rate of tax should be rationalized so that the normal consumer should not be overburdened, or the prices of such things should not go beyond the affordable limits, because indirect tax is definitely absorbed by the end consumer, so that should be applied vigilantly. I can only say this.
Right, so let's take two more questions. We've got one at the back and we've got one at the front, so let's take them both together. I'm going to ask that question from Chip.
My name is Mohammed Agar from Solution. My question is connected with the earlier discussion that we have mentioned that for unregistered supply, a taxpayer can present 1% with volume tax, and that is pronounced in all the jurisdictions in Pakistan. The question is, if a supplier is unregistered, he normally avoid to issue a sales tax return or add that amount. So, what would be the practical possibility that we can deduct the 1% from their payment? And second part is, do the all the tax collecting authority, regional tax collecting authorities, have a specific line item in their returns for that unregistered part reporting?
Okay, so we've got that question. Please bring the microphone right to the front here. If you could bring it right to the front, so that we can get two questions in at a time. So, please.
Thank you. My name is Khalid Mahmood. I am General Manager in PCA. My question is, sir, as you mentioned, there is a lot of issues with tax authorities and major large companies for provision of services, technical services or management services, and they are non-resident there. So that is the onus of withholding of tax on non-resident payments. But there are some countries where there are special provision for registration, allowing the registration of the non-residents for issuing of sale tax. So, can you explain? There is some chances that Pakistan we can do something like this one thing. Another gentleman was asking, there was the issue of finalization of rules after 18th Amendment between provinces and federation regarding the issue of taxes. It is not only the consumption. The issue we are facing that as each province said, I will collect on the basis of population. The other say I will collect on the basis of revenue. The third say there is no defined criteria yet. So this is the observation on this question. We have been tracking this issue with all the small provinces and federation. One of the provinces have agreed that they will issue the notification. We hope this will happen. Again, the first question: can we issue the non-resident can issue the invoice, sales tax invoice?
Particularly, your focus is basically to claim the input tax.
Yeah, yes.
That is the
Yes,
problem.
yes. Because that is becoming a big burden for the economies.
So let's take the first one that was asked. We'll take it in two goes. So we'll have to remember this one.
Yeah, the reply to the first question is only yes.
Yes.
Because obviously there is a separate column in the return for reporting that withholding tax in the sales tax return. There is a column, and the second was that whether it would be how it would be applied. So whenever you will be making payment or purchasing the good from the unregistered person, so you are liable to withhold 1% irrespective of the fact that because non-registered person will not charge any amount of sales tax on the invoice. So whatever the total invoice value is, you have to deduct 1% of that invoice value, and that will be deposited in the government treasury by reporting it as a separate column in the return.
And you have to give the details of
detail of the supplier is required to be provided.
That's the whole. And what about our friend here?
Yeah, basically this is the problem which you are correctly mentioning, and this problem has not just been started, rather this is a problem since decades, I can say, when the excise duty was also collected on the similar board, that when you will be making payment to abroad on account of fee for technical services or royalty. At that time, initially the royalty it was subject to withholding tax under the excise duty board. And what I recall, practically the people who were making payment on the excise duty part, they were claiming it in their tax return as an input taxes by showing their own sales tax registration number on the assumption that if I have procured services from the abroad, who that person is not a resident of this Pakistan, not providing any services while coming within the territorial jurisdiction of Pakistan, and therefore that person is not liable to be even registered within the Pakistan because his business activity is all conducted from the abroad. So Pakistani law cannot be applied on that person. And under the Pakistani law, if the person who is making payment, that person is basically increasing that cost or bearing that cost out of their own resources because of the fact that the foreign supplier says that I will provide service of say $100, and if there will be any taxation which is going to be charged in Pakistan, that will be absorbed in addition to that $100 by the purchaser of the services. So on these arguments, the persons who were making payments of, I can say the tax, that person was claiming in their return by showing their own sales tax registration number. Then there was one meeting of the Federal Board of Revenue in Karachi Tax Bar, and at that time the member operation, I think this Dr. Ishal, I recall the same person was there, and he accepted that yes, we'll go back and issue some notification that this input tax can be claimed, which could not be issued till today. Yes, but but I will just explain you that by following the same pattern, I have just claimed in the Punjab sales tax return on the same principle, and my manager explained me that it can be claimed by showing either on own sales tax number. So this input tax is going to be claimed at this moment, and till this time I have not heard about any major litigation, though and in some cases the government has initiated proceeding and started, and it will be now finally settled with the court. That in my view, it's a good case for claiming of input taxes on the justification that the person, if those services are used for taxable activity, that condition has been fulfilled, and the person is making payment of tax to the government authorities. So on the one stage, if input tax has been paid, the right to claim that input tax accrues. The only missing part remains that in every statute there is a provision that in order to claim the input tax, you must hold a valid sales tax invoice. But in this situation, this sales tax invoice cannot be issued because the issuer of invoice is not placed within the territorial jurisdiction of Pakistan. Hence, that and by following the principle of the law, that the law does not require anything to be done which is practically impossible. So in this situation, this is practically impossible that the service provider cannot issue invoice. So I hope that the court will accept and this input tax will be allowed.
So just to summarize, in other words, you could be getting a benefit from attending this. You may be able to claim, based upon what OS has shared with you. You won't be charging for these services, but you could benefit from that. From what I understood from your presentation, Chaz, was that when goods are being imported, and this may be a service being imported, but it's a self-charge. You say it's a reverse charge. You charge yourself input. Yeah.
Well, it's normally the case with goods, and it depends. As I say, in the European Union, there'll just be one jurisdiction. Company in one jurisdiction will charge the consumer in the other jurisdiction the local VAT. But here it would be a reverse charge, so you charge yourself the VAT.
Please explain. Basically, in the roads in Pakistan, when any person is importing goods, it's making payment of the VAT at the time of clearance report and claim, the government has not created any problem, and that the government is allowed. Basically, on the reverse charge, how European Union is dealing with the other countries is dealing with whenever the payment of tax on services is made under the reverse charge mechanism, whether the input is allowed in that jurisdiction?
Yes, it is. It's allowed throughout the European Union. That's what the VAT rules require. And it's, as I said at the beginning, I don't remember if I actually explained in where I spoke about the refund situation. If you do end up in a refund situation, though, there are some jurisdictions which just will not refund you the input tax. So you may, for whatever reason, end up in a refund situation. So that will be a problem in, say, Italy or Greece or some of the other jurisdictions. But in the UK, it's absolutely fine. But normally, if you're a business undertaking taxable services, you just deduct against your other services. And so there won't be any problems whatsoever.
Right, so I would like to well, there's one question here, please.
Small observation on
We get the microphone here. Are there any more hands up? Because then I'll take it. So one question here, one there, and one at the back. So we'll take 3 questions from the floor, and that will be it.
2 on
And 2
online.
from online as well.
yeah, I just a little observation. Just observation regarding the chair has mentioned of the group accounting or group taxation, sorry. And we have a sort of consultation and other things, but I think this is a good idea if we have a sort of group taxation in one hand, and we can have the whole group is recorded and assessed in one place, and so that we can have. I think that's a good idea. We can have that budget from increases like that, and we can put that to the PR to adopt that. So I think that we should work on that.
Well, that's a great idea. We've got Mr. Yasser, one of our members, who's on our taxation subcommittee. So definitely these ideas will be, we must be more intuitive with our budget proposals. We can't be continue to be orthodox in doing the same things year after year with the budget proposals. We have to be more intuitive. We have to record the discussions that we've had here, and those particular problems that you mentioned, sir, around the reverse charges, we have to bring these up at the time of the budget proposals. So there were two other questions. So if I could get this chap at the front here, and one there. So we take your questions, sir.
My name is Masood. I want to ask Mr. What are your views on the possibility of implementing the VAT grouping concept in Pakistan, especially on the importers who under-invoice their goods, and particularly on the retailers and wholesalers, because the current scenario, the current tax system implemented by the government of Pakistan is not producing the desired results. So what are your views, and do we need to implement a new system in order to collect more taxes?
Right, so we'll answer that in a second. So what are the chances of VAT grouping being implemented here? And one question here as well? Was it one here?
No.
Oh, one in the back. Can you hold the microphone closer to your mouth?
Yeah. Government promote some industries through creating tax-free zones, as 5% tax is implemented in UAE in 2018. So what is the reviewing action regarding these areas? Will they remain in some areas like tax-free zones?
Right, okay, so there are free zones within the UAE where there's no taxation. There may be free zones now, for example, Guadalajara may be a free zone, so we need to understand what will be the VAT implications for free zones which are operating in the GCC countries. Was that your question, sir? Right, so let's take the two, I think your suggestion, sir, was related to the VAT grouping. But where's that? Can you VAT grouping the answer down there or at the back? Sharon?
Well, in terms of the, because this came up in the UAE about free zones and how they can be impacted by the introduction of VAT. Well, there's basically 2 points here. First of all, if you're in the free zone, then basically we don't know. We're guessing because we haven't seen the legislation yet. But what we're guessing is that the free zones will stay free, but clearly all around the free zone is going to be VAT. So whether you'll be able to recover input tax, probably will. Well, I would be surprised if you won't within the free zone when something comes across taxed, and then when you actually then sell something outside the free zone, then the person receiving will treat it like an import, and they'll have to charge themselves. They have to do reverse charges, the way I understand. In terms of but there's also a second line of thinking that the free zones, I'm not quite sure why you need to set up a free zone if it's tax-free anyway, but the second line of thinking was that it could be that you wouldn't be taxable subject to VAT, and it depended on the contract that you had in terms of the free zone terms, whether you would actually then, when the VAT would come in. So we don't know precisely, but they're basically the couple of options that we discussed rather than that.
I think the other thing to also think about is that it's not a tax on the businesses. Rather it's it's businesses acting as collecting agents. So therefore, effectively, when you're taxing businesses for VAT, they're just collecting you from the consumer. So you can still be a free zone, but still be collecting VAT for the authority. And the other question was around the VAT grouping
implementation. So that is the basically challenge. But nowadays I can only say because in case of the import, a lot of information is available on various websites, like the country which is the goods from where it has been exported. They declare that how much export has been made. So by adopting and verifying the value that the exporting country is receiving, the importing country can cross-match, and so the valuation at import can be corrected. And now I think that in the recently the government has started revising the minimum ITP values by collecting the data, particularly from those countries to whom they are signing the agreement for sharing of the information on taxation. And I practically exercised on one of the products, and I, as an individual, was able to even get the information from an authenticated website that if a product A is exporting from one country, and what price they have exported that, and what price per unit price, and similarly the total, even the exports to Pakistan has been separately mentioned, the product A, product B. So the imports obviously can be corrected on the basis of that value. Similarly, on the basis of some information available from the comparative markets, that how much the price of the goods will be charged. And the other thing on the retail sector, if I can say, because the retail sector is such sector which is operating a shop in an area that is not an alien to the government, that government cannot find that any person came and made a transaction and went back, and how they can trace. Rather, the retail sector is obviously placed in the various markets, and that is the only, I can say, the political will of the government is required to implement the tax thereon. And the second is how our tax machinery is prepared to go and make a survey and check the market, because there have been number of surveys in the, I think in the Musharraf era, when the people were known that the dictator government is there, the army-led survey was made, information was gathered from the various markets, but could not be implemented at that time. So obviously that bill is required to implement a tax on that sector.
And let's take the two online
Yes,
questions.
extremely important because there are around 70, more than 70 individuals that are also joining us online. There is a question from Nabil Asif, and he's asking, should direct and indirect fall under preview of the same authority? For instance, existing tax collection authority in UK, Her Majesty's Customs and Excise. Or do you prefer what used to happen in UK prior to 2005, that is, VAT was under the preview of Her Majesty's Customs and Excise? Will the demerger of the two responsibilities improve tax collection in Pakistan?
Well, I think we can dispense with the UK tax regime. The point is, let's just stick to Pakistan. You know, it's fact of life now that tax on services is being collected by the provinces, tax on goods is being collected by the federation. You know, whether we like it or not, we have to live with it. Yeah. So I don't think we need to expand. Do you want to expand on that, whether it's effective or not?
Basically, on the one side, I can say, just if you see on the performance side, I can say the provincial authorities are collecting more efficiently as compared to the federal government. But this is the only performance side. But if I look on the businesses side, I can say in the Pakistan now, doing a business is obviously a very, very hectic exercise, because one business has to make compliances with a number of authorities. So that part is required to be addressed, because they have that in any manner some consolidated filing mechanism should be adopted, so that the businesses should not be suffered, because only those businesses are suffering which are compliant, who are contributing in the taxes. So that is required to be obviously consolidated.
So we need to reduce the complexity, but the provinces are collecting a significant amount of tax.
Yes.
There's another question for you, that is there any steps being taken towards the harmonization of indirect tax enforcement and collection systems?
So I can only say that unfortunately till this time, anyone I think from the audience was also already discussing that that is a very much need of the time, because when various taxes have been introduced, the harmonization was necessary, and one committee was required to be constituted, as I think the PTCL team has already explained that, because now the people are facing the which jurisdiction should collect tax, which jurisdiction should not, and these problems can only be addressed if any central committee is constituted, and the federal government and all the provincial governments will sit together, will decide these issues, and until it is not decided, obviously this is going to be create a much more problem for our business.
Great. Thank you all very much. I'm going to end it there. I'm going to ask Noor to hand me over the shields for the participants. So a big round of applause, please, for Chad. Questions. Some of those questions may actually lead to a monetary benefit for some audience members. Let's keep our fingers crossed.
If we could both come in the center, Arif sir, if you could come in the center. We have the first one for Avesa. This is in honor of Chaz completing his 25 years at ACCA.
Yes, it's 25 years.
And if we can have one group photograph with the three of you.
Yes.
And whilst they are getting geared up for the group photograph, there's a feedback form that we have kept into the folders that are on your seats. If you could take just a couple of minutes and just fill in your feedback. It's extremely essential for us to know what topics of interest we have and just for us to improve our general discussion areas. Yes, the entire event is for 2 hours, so we've kept the registration just to ensure that your name is taken off there. All the ACC members and members of the professional accountancy body can claim up to 2 CPD hours for today's session.
Thank you all very much. I think straight after the event, there is dinner.
There is dinner, yes.
There is dinner, yeah.
I assure you.
There is dinner being served outside the hall, so please do join us for dinner afterwards. If you have any questions that you couldn't ask, all three of us are going to be here. Please feel free to ask any questions. Thank you all very much. Thank you.
Sorry.